Although trading provides lots of opportunities to make a great income and a great life for oneself, it isn't easy if you don't know what you're doing. This leads many traders to ask themselves the question, should I quit trading? In this video, we're gonna talk about everything you should consider if you're on the fence and you're thinking about quitting trading. Now, let's get into it. Ultimately, around 75% of traders fail when trading the market. So, if you're thinking about throwing in the towel, you're not alone. Trading any market is a huge time commitment, and it can be tough to balance learning, chart time, and trading alongside a full-time job, family, and a social life. Not only that, but in your first year of trading, it's unlikely that you'll be making any significant profits, so you're investing a huge amount of time trying to be successful. In 2020, I almost quit trading myself as I had a very rough quarter and I thought it was the time to throw the towel in. But luckily, I didn't. But I'm not going to give you a motivational speech to try and stop you from quitting the trading journey. What we need to do is objectively look at your trading to figure out why you're failing and what you're not doing. Once we take a look at that, we can take a look at what needs to be done to help you achieve that profitability. To understand whether you should or shouldn't give up trading, you need to look at why you're feeling like this. It usually comes out to two different options. Firstly, you're not profitable and you're not earning money from the markets. Secondly, you're somewhat profitable, but it's not earning you as much as you were hoping to. You have other things to dedicate your time to, and there's simply not that much time left for trading. With both of these options, the answer is not necessarily always quitting trading. If you're unprofitable, you can look at the reasons why that is and focus your energy on the areas that need the improvement. If you're not going to be able to dedicate enough time, you can look at using trading strategies using higher time frames. Secondly, if you're not earning enough from trading, you can consider taking on a funded account and have hundreds of thousands available to you quickly. Quitting is very rarely the right answer. If you're watching this video, we can probably safely assume that you're not very profitable within the markets, which is okay. The reality is that a lot fewer traders are profitable than you might think. The perception can be easily warped when looking at traders all over social media. Of course, they're gonna present their life in a light that makes it seem like they're doing incredibly well. But as we all know, social media is not exactly a representation of reality. So let's look at why you could be failing in the markets. No trading strategy. Without a trading strategy, you will not be successful. Our professional traders have thousands of backtested trades, proving the profitability of their system before they ever touch a live trade. The second thing that keeps people failing is changing their trading strategy every couple of weeks. When most beginners lose 2 or 3 trades in a row, they're quick to abandon the trading strategy and hop onto the next one. Drawdown is completely normal, and changing the strategy usually doesn't achieve anything. Another thing is no risk management strategy. Even with a bulletproof trading strategy, you absolutely have to have good risk management in place. That is, if you ever want to see long-term profitability, you might make some good profits in the short term without good risk management, but over long term, you're going to blow up. Next is no trade management strategy. Once you're in trades, when do you close them? Do you make them break even? Do you add extra capital to the winners? These are all important factors that need to be considered over leveraging your capital. We work with many traders that were previously over leveraging the money that they had available to them and blowing through their accounts. Once they moved to trading with Lux, started using a lower risk, their consistency began to show. These are the primary drivers for failing to stay consistent on your trading journey. When analyzing performance, it's crucial to be objective and honest with yourself. Many traders lie to themselves about making it, when in reality they're trading 0.01 lot positions on Euro USD and still losing money. Now that we've established some of the areas where you could potentially be going wrong, now that you've had a good look at yourself and what you're doing, let's start thinking about what can we do to bring you back onto the successful trading journey. Again, quitting isn't always the right answer. This is ultimately the most important part of becoming a successful trader. You must build a fully well-functioning trading strategy, including including the actual setups you'll take, objective rules to follow, risk management rules, trade management rules, and even emotional rules to follow. The more robotic you can make this, the better. If your trading strategy is built around subjectivity and nuance, it'll be impossible to prove its profitability and very hard to consistently replicate profitable trades. As the saying goes, I do not fear the man who has practiced 10,000 kicks. I fear the one who has practiced the one kick 10,000 times. Shiny ball syndrome is a huge thing within the online trading community. You're trading support and resistance based strategies, and you have a bad week and you see somebody doing well with a smart money concept, so you start trading that, you abandon your old strategy. You change your whole trading style to fit this new concept, and you get excited about the prospects of success. The next week comes and you have a bad week. You then realize that if you were to stick with the previous strategy, you would have actually made some profit. Does that sound familiar? Right? Stick with one strategy, backtest it, be sure about it. If you properly backtest your strategy, you will immediately know if the strategy is profitable or a fluke. One huge cause of traders failing to actually earn a living from the markets is the lack of trading capital. This causes risky trading and over-leveraging their own accounts, ultimately leading to blown accounts and lack of consistency in your trading results. Prop firms are a great way to secure additional funding for you and earn money in the markets by earning a profit split. All that without needing to take a lot of risk per trade. For instance, we fund our traders with up to $10 million of trading capital. We take a 25% cut from the profits that the traders make, and they get to keep 75%. For traders with $500 in their trading account, making 2% a month is not worth doing, although this is incredibly achievable for most people. However, traders with our funded accounts earning 2% a month are making a very nice living. Once again, all that with extremely tight risk. So, should you quit? Giving up on trading is rarely the right answer. It's certainly not an easy market to conquer, but it's one worth sticking to. Get the idea of huge wealth and 90% profit months out of your head. There are traders making consistent 1 to 2% each month on funded accounts that are making a very, very successful living from that. That is what real trading looks like, and we would have many more profitable traders if all traders were content with making just 1 to 2% a month. So the choice is up to you. You can either quit or you can build a realistic mindset in trading. That's gonna be it from me for today. Thank you for watching. If you liked the video, don't forget to like, share, and subscribe. If you want to get in touch with us, feel free to email us at info@luxtradingfirm.com or send us a message to our 24/5 live chat. We also have a Discord community for you to join, so don't forget about that. And I appreciate the time you spend watching this video. I'll see you in the next one, and until then, have a great one.